So we got some breaking news just now. Ant Group just came out and said that they do not plan for an IPO even after the potential restructuring finalization that's going to happen really soon. And so that's what I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up, guys? And I know a lot of you guys are invested in Alibaba, and one of the reasons why you have that investment in Alibaba is because you guys are excited about the fact that they're going to IPO Ant Group, and it's just going to increase the amount of cash on the balance sheet which they can use to repurchase some of the securities. But one of the comments that many investors have been making on all of the Alibaba videos where I talk about Ant Group is that they do not want Ant Group to IPO. They want to keep as much of that high growth income for themselves as possible. And I think I'm on team keep Ant Group as part of Alibaba. I think it ultimately just increases the valuation for the company as a whole. Now, the company is still trading at a significant discount to its intrinsic value. I think it's trading at around half of what it's worth. And that is without the inclusion of Ant Group, which I will show you in this video. But if you include Ant Group, or the contribution that Alibaba gets from their ownership in Ant Group, which we're not for sure of like what the finalized amount is just yet, I would say as far as the CCP is concerned, do not assume anything until everything is finalized. And even at that point, add a margin of safety, an additional margin of safety if you can. But there is a contribution expected at the end of the day. And so once we sort of get that stuff finalized, we can include that into our valuation for Alibaba. And instead of a $250 valuation, you might get like a $300-400 valuation, depending on, you know, what the size and scale of the growth that we're seeing with Ant Group becomes. Now let's just dive into this article. So it was just issued by Reuters, and so Ant Group says no plan for IPO. They're going to be focusing on the business optimization, and so I think that's a good idea, especially because the growth trajectory of the company has slowed as a result of the restructuring. So I just don't even think it's the right market timing for an IPO anyways. But you know, we have seen Ant Group grow considerably. They're still growing fast, and so let's see how this plays out. But I really like the idea of Alibaba holding on to as much ownership as they can. Now, it's just one exhibit for the article. So you can see here, China's fintech giant Ant Group says they have no plans to initiate the initial public offering. And you know, normally it's from people that are like close to the matters, but here you can see that this was an emailed statement to Reuters, and so it looks like it's coming directly from Ant Group, and so we can believe this. And so Ant Group has been focusing on its business rectification and optimization and does not have a plan for an IPO, the company spokesperson said. Now, the question I have, and you guys let me know what you think, but are they just saying this right now as they go through the, you know, reformation of the company and whatever, like the rectification or whatever it is, and then as soon as they're on the other side of that, do they start pursuing IPO options? I'm assuming that they don't, because you couldn't have picked a better time to IPO at the end of November of 2020. And now the market is completely turned on them, and I just don't think that they would get that valuation anymore. Mind you, the company is completely different now, so you probably wouldn't get that valuation anyways, but I just think there's a lot of reasons why it just doesn't make sense to IPO it from sort of like a market timing perspective. And this is news to me. So Reuters at least has printed that Ant is nearing the completion of its 2-year regulatory-driven restructuring. I just wasn't given anything from the CCP in terms of disclosures or anything that said that, you know, they're nearing the end of it. But okay, if Reuters is saying this, I'll take that into consideration. I'm just not going to assume that it's nearing its end. And it looks like Chinese authorities are poised to impose a fine of more than $1 billion on the firm. And so, you know, they said that they reported this in November. I probably just missed it, which is okay. It's not the biggest deal in the world, but hopefully that this does end and we can move forward with Ant Group operating without any sort of like overt regulatory interruption. Now, the one thing that I did discuss in the previous video that was released a couple of days ago is that, you know, if you want to list on China's domestic A-share market, you have to wait 3 years after a change of control. And recall, guys, that Ant Group founder Jack Ma just relinquished some control, and so they cannot list on the domestic A-share market for 3 years after changing control. On the Shanghai's NASDAQ style index, you have to wait 2 years, and on the Hong Kong Stock Exchange, you got to wait 1 year. But, you know, it doesn't look like there's any indications of an IPO. And for some of you guys who are just learning about the story right now, recall, guys, that Ant was going to do an IPO as high as 37 billion. I like how they just posted 37 billion. It was as high as 37. I think that number is even higher than what we originally thought. But anyways, and it was canceled at the last minute in November of 2020. I just don't think you can pick a better time to have IPO'd the company. And so I just don't see a reason why they would IPO anymore as soon as they were able to anyways. Now, just looking at the markets overall, it looks like there's a slight pullback in after hours trading. But I think the reason why we're not seeing a large pullback, especially, you know, this Ant Group sort of surge that we saw here, is because people haven't really given much credit to Ant Group IPOing in their valuations for Baba anyways, at least until we can get clarification on this issue. And so, you know, this did increase people's valuation models for Ant Group being able to earn a higher income because, you know, they have more equity so they can loan out more. So I understand this run up, but, you know, just because they're not IPOing doesn't necessarily mean that it sort of destroys any value or anything from an investor's perspective. So I think this is a very, very appropriate response for the shares, but we'll see what happens when markets open tomorrow morning. Now, just to let you guys know how conservative I'm being with Ant Group, recall, Ant Group is actually not formulated into my cash flow forecasting. I use a free cash flow per share valuation model for Alibaba. And so I don't really use the P&L, like the net income. But notice that at Ant Group, just for some of you guys who are not aware, Ant Group does show up on the P&L for Alibaba. It is accounted for under the equity method. I'm not forecasting Ant Group to grow significantly at all, but we know that it has been. And so I'm just going to remain conservative and leave it at 7.5% as we still don't have a final ownership structure. So these numbers are going to change, of course, but I'll just wait until I have the final numbers before I do anything with it. But keep in mind, guys, that you will see this line in the model, but it's not really going anywhere in terms of like the ultimate valuation. I just put it here because I need to forecast out the P&L, but I'm not using, once again, not using net income to forecast out the earnings for Alibaba. I'm using a cash flow metric, which you can see how I build to in the model. And so what does the valuation for Alibaba look like? Well, using a 15 times terminal multiple and a discount rate of 11.5%, I'm valuing the company's business operations at around $190 per share, and I'm valuing the obviously there's excess cash on the balance sheet, which gives it another $40 a share. So ultimately the company's worth around $225 per share compared to its current share price. The company's trading at less than half of its intrinsic value, or, you know, 20 times next year's free cash flow per share amount, and that is net of the forecasted stock-based compensation. And so you will hear people on the internet talk about that Alibaba is grossly undervalued, and they'll show you like multiples to free cash flow of like 12 or 13, but don't get fooled by that because they're not taking into account stock-based compensation or the forecasted stock-based compensation. So when you do a 1 year forward free cash flow per share multiple, you have to deduct from that free cash flow amount the stock-based compensation that you expect for them to issue in that year. And so just be very careful when you hear people talk about how cheap Alibaba actually is. I don't think it's like super cheap on a current valuation perspective. I think that it grows into that ultimate intrinsic value that I'm providing to it. And in fact, the multiple actually declines. So it's, of course, 20 times earnings or free cash flow per share earnings right now. And ultimately, I expect that multiple to come down to 15. So there is a sort of like a dragging anchor effect on that valuation over time. Now, if you want access to that Alibaba model, which I'm very proud of, you can get access to all of my research at that lower tier. Now, this research is just my opinion of what I think companies are worth. It's not like a definitive, this is what the company's intrinsic value is. And so you can get access to everything. There's Alibaba, Alphabet, Tesla, many names here. And if you want to join us for an epic live presentation, you can join us at that higher tier. Now, if you want a little bit more information on the press release that just came out a couple of days ago where Jack Ma discussed relinquishing, or it was reported that Jack Ma relinquished control of Ant Group, you can get access to that video right here.